Hello and welcome to my daily market report. Today was a good day and a bad day. Why do I call it a good day and a bad day? First of all, the indices were positive today. That was good. What was bad about the day? Well, again, the same old pattern of plus or minus 1% or below came through the four. The good part today was that we saw the return of the needy. Who's the needy? Non-institutional domestic investors. They bounced back. The advance decline ratio was today tilted in favor of advances, not very strongly. I think about 1600 is to 1350, right? But a big difference from yesterday where it was almost 1100 is to 1900, right? So clearly the thing that I had hoped for yesterday, if you recollect my conversation with you all, was that this profit booking by the needy, hopefully it ends. Well, yes, today they've come back and it's visible in what? Invisible in the fact that the broader market did better than the larger cap market. So Nifty and the mid cap where FIS play was around 30-35 basis points up, but the small cap was up 1% and the micro cap also up 1%. So clearly these participants buying in those spaces is what drove it up. The geopolitical scenario today was pretty much flat. Oil was at 74, yesterday it was 73, so still floating around there. The dollar index at 101.3, similar to yesterday. The US 10-year at 4.4 versus yesterday's 4.35 or something. And the rupee interest rate also around the same flat levels as yesterday. No change. And the rupee weakened slightly. Yesterday it strengthened slightly to weaken. So geopolitically there was calm in the sense of stability, right? And as the pattern has been going, FIs continue to sell. They stepped up their selling. Yesterday was 1350 crores. Today they sold more than 2000 crores, right? So 2500 crores. And the typical pattern, the day the FIs step up their selling, the DIIs step up their buying. So they bought almost 7,000 crores today. So it's almost falling into a pattern here. And because then, if you look at it, is the domestic which drove the markets today with 7,000 crores of DII and the needy returning, right? You saw the sector performance also show the high risk, high reward sectors like a defense, realty, rate sensitives like consumer durable. These led the pack, right? And pharma, as has been happening for quite some time now, is the defensive pick, maybe by some FIs too, and definitely by DIIs, because it was up about 0.4, not so great as yesterday, but still pharma is the new IT. So the play for rupee depreciation. Well, the rupee was slightly worse today. Later in the night today, I will get to know the premium levels. But clearly, I would see a 3% odd depreciation of the rupee. And if at all FIs want to protect their exposure here, pharma looks a better bet than IT. And IT was again the worst performer today with almost 3%, 2.73% down. Why? Well, what started with the Accenture's bad earnings result, the rest of the IT pack in the US is reporting, but again, from the client's perspective, the order books are either flat or lower, and they are not giving fresh, high profitable, small ticket deals to them. This is the story which is developing, and market is apprehensive that the same will be true for the Indian IT pack, and hence it is under pressure, right? So from that point of view, what else was the thing which was down today? Well, infra, energy, metals were all reasonably flat, and private and PSU banks were down today, as well as FMCG. Well, the answer partly lies in the fact that June has proved to be a very bad month for the monsoon. I hope you got a chance to see my video around the monsoon. June, with only 42% of long-term period average compared to last year, has been one of the worst in the record in terms of June. But let's not lose hope because of the fact that this was not El Nino. This was a counteracting force from three other places, the Indian dipole and something coming down from the north, which blocked the monsoon. The monsoon has finally really entered in the last week of June, so that's good news. The second is July, which is important because June accounts only for 19% of the total monsoon that India receives. July accounts for 32%. So it's a big month. So let's hope, though the El Nino effect will come out only in August and September, but this is the Kharif sowing period, and hence let's hope for the best on that front, right? So apart from that, like I said, there's nothing much. The volatility index was also flat today, and Brent crude was also flat, as I already mentioned, right? So a day which is falling into the pattern, and let me repeat that pattern. FIS continues to be sellers, though albeit on a much lower scale than in the first half of June or the months before, number one. When the FIS sell more, DIs buy more. That's another pattern. The needy participants, on a day-to-day, they have mood changes because they went through a period of profit booking over the last 34 days. Today, they have happily turned around to fresh buying. And so you see the high risk, high reward, if you may call it, realty, defense, all leading the pack. So that's the summary. There's some auto top line numbers expected tonight, tomorrow morning. So maybe that will give some kind of a boost to the auto sector, which was not a great performer today, right? So thank you for listening, and look forward to my next update tomorrow. Do remember to watch both my monsoon update that I put up earlier today, and as well as the write-up that I will put up tomorrow. Hopefully, I will try and also do a monthly review for the month of June and what to look forward in July sometime over the next day or two. Thank you then. Good night.